Hello again, everybody. It's Harry Boxer, the technical trader at thetechtrader.com. It's Thursday night, January the 14th. Big rally on Wall Street. The last hour did give up a little bit of it, quite a bit of a chunk actually. And I'm not surprised. You know, bear market rallies, if this is what it is, can be very vicious. At the same time, when we get a explosive move off the lows like that, we can also be coming off of an important bottom. And look, we were a little off in terms of our cycle timing. We're looking for something last week. It came a few days later, but nevertheless, we needed to get that sell-off to get down to a level which many of the stocks and indices, ETFs, etc., were oversold. Let's take a look at the BIB today. For example, the LABU and BIB had vicious reversals today, but after 1, 2, 3, 4, and 5 wave were completed. Take a look at this last wave down, which took this from 75 to today's low of 46. That's 29 points in a couple weeks straight down, but a big reversal. From 46 to 54 nearly, about 8 points, 7.75 points. The ETF reversed sharply off the bottom of the channel and has now moved back to where resistance level is. If we can punch this through the next day or two, we could very well see this up near 60, even low 60s for an extension trade. But looking for a 50% retrace gets you to about 60. CRR. Now, this is a stock I haven't looked at in a long time. Some of you may remember that I had this on my short list, and it was a beauty for us because we shorted it in the 90s. It dropped all the way down to the 25 area in a massive 1, 2, 3, 4, 5 wave decline. But after forming a little base and it looked like it was breaking out, I took it off my list and discontinued following it, unbeknownst to me because I didn't see it. 47 down to 15. How about that? So it lost 2/3 more of its value. And from the all-time high in July of 2014, when it reached 154, this stock is seen under 15. So massive drop. But today, a big reversal. Now there's 14.7 days to cover. Today, it traded 1.7 million. It hasn't seen that volume since August, and the second biggest volume since April. So a big move today. Took it out through all three moving averages. The declining top line and the lateral resistance at the double top and close going away, up 370 or 23%, with 1,000,007 traded and 14.7 days to cover. We may very well get a follow through tomorrow that tests 1985.20. If we can punch through that, my target's 22.5 and then ultimately 26. This stock's come a long way down and may have a big reversal underway right here. Keep an eye on this one. EGHT, one of our favorites, and the reason is that this is a beautiful inverse head and shoulders here. Another retest which made it a double right shoulder, but anyway, the breakout occurred here with the big run up. We had a beautiful swing trade there, and then it came down in a three-wave corrective pullback, and now this entire consolidation may set up a move that takes us eventually to 14.5, 15 if we get a cooperating market. There is some resistance going forward up around 11.75, 12, and then about the 12.40 range. But if we can get up through that declining topside, I have some confidence we could see leg 1, 2, and 3 take place, which could lead to a very nice move. And we may put another swing on this one. Again, market cooperating. ERII, well, after dropping out of this wedge and pulling down into the gap, it reversed sharply today from 590 to 670, closing just 3 cents off the high, up 77 cents or 13%. With 7 days to cover and 750,000 trading today, it may have reversed, but we do need to watch and see if 7.25 get taken out. That would be a major move for it. So just something to watch. Today was a good day for it. Now ERX, as oil reversed finally, having got down to 29.96, I believe the low. It got up back a couple points today. In the last couple days since the reversal, and maybe on the way back up into the mid-30s. Well, if that does occur, I expect ERX could make it up towards 22, 23. It may go as high as this zone up here, right around that 26 range, and with outside potential of 28. But let's just say that when you have a retracement that takes a stock from 40 to 16, or 24 points, you can easily get 12 points back up. 16 and 12 is 28. That's why I'm having a potential move into that zone there. LABU was the other instrument along with the BIB that follows the biotech group, a triple biotech bull. 1, 2, 3, 4, and now the fifth wave, a rollover hard from the 23 range down to under 9 today. Got down to 8.25. As you know, we traded this very successfully today from after a failure in the morning, the secondary shot at it really worked out as it went from 8.25 to 11. And it was a good trade for a lot of us here at techtrader.com. 9.9 million, the biggest volume I think ever traded on the stock, as far as I can see. And for me, I'm looking for a move back up to 14, maybe 15, 15 and a quarter. The retracement from, again, from 20, nearly 23 down to 8, about 15 points, could get you 7.5 points off that low and back up towards 15. So we'll see if it does at 50% for starters off the bottom. Rovi, well, we gave you this stock last week, and you can see why it's acting so well. This base and breakout, and in this market deteriorating as rapidly as it was, this stock actually broke out of the wedge, and today extended a little bit with a nice pop of 79 cents or 4.75%, with 1.6 million traded. Not heavy volume, but we'll see what and if happens. What happens to the stock if and when it gets up near 18. The next target at 20 and then 22. Silicon Graphics has had a really big move in the last 4 sessions, taking it from 455.60 range to 7. A nice 60-70% move, 65% move. You can see that the declining top line was taken out, and lateral price resistance there was taken out. And now this movement up here may very well occur as it tests the 730-35 zone short term, and then maybe 8. With almost 10 days to cover, this could be something to watch as it has momentum right now. VCRA, well, after the explosive move last week and then the pullback this week, today it snapped right back, jumping 86 cents or 6.3%. With 8 days to cover at the top of the channel, you could have one or two things occur. It pulls back and continues to consolidate, or runs up towards 16, my next target. And lastly is XON, and this was a vicious reversal. After 1, 2, 3, 4, and a 5-wave decline, ending in a 5th wave climactic type move downward, and it's a reversal. For this stock to go from 18.5 to 25.5, a $7 move and closing near the upper end of the range leads me to believe we may very well test this level near, say, 27.75 to 28.5 in that zone. So I'll watch for a follow through tomorrow. But anytime we stock reverses like that with big volume, and often at the bottom of a channel, it often leads to something much more than that. So we'll keep an eye on that one. Now a quick look at the Boxer short side. Some of these are so extended that they're not anything more than watch for entry ops as they rally back. If we are going to go lower in the market, these may be perfect examples. Now this stock, which was put out as a short a week ago around 77, has dropped down into the 60, as low as 65.99 today. So you can see that it's at secondary support. It very well may be forming some sort of channel down here off of that level. Let's take this out for a minute. You can see that the parallel channel here could result in a snapback that would create a better opportunity for a move down eventually into the 55.60 zone. For now, I'm looking for this to extend after today's reversal to get up near like 72.3 range. If it fails there or rolls over in kind of a bear flag fashion or sets up here, then I'd be looking for lower levels. Keep an eye on this one. CAR, well, this stock's been down all year since the double top created in December, January of 2015. It's come down viciously from 70 to the mid-20s. And you can see the move in just the last 2 weeks has taken it straight down from 37 and change to 25 and change. So with this stock now at long-term support here, I'd have to say what I'd be looking for in this stock is for a rally to occur or some sort of bounce back to occur to give this stock an opportunity to snap back into, say, the mid-30s, or maybe even just low 30s, or just form a bear flag. And then should it collapse below here, we could see high teens or even mid-teens on CAR. Creato is a stock I put out as a swing short. It rolled over hard and it's been down every day for 2 weeks. Now below this, that, and this support, you can see how this stock is falling away. This is not actually support, it goes way back. So you can see now that if it does extend further, we may see it down around 28, but with such a steep slide and with the market potentially reversing, watch for a snapback or move back towards 33, 3.5, or something in that zone. And if it does it very weakly or in a bear flag type fashion, then I would look for much deeper retrace to retest the 28 zone and maybe as low as mid-20s. GPN, well, this one was a recent swing short after collapsing and forming a bear wedge we put out a short on it. It then rolled over from the mid-60s to the mid-50s. Today did bounce off of 55.94. That's a pretty quick, sharp drop over the last week and a half, but it's taken out 2 layers of support and held right at that 3rd layer right there. So if we do get some kind of rally or retracement back up towards 59, maybe eventually does roll over into the 51, 51.5 zone. My next target on that one. HAR also down substantially when it broke and snapped back and then formed this big rising wedge. It then collapsed from 112.13 range where I initially indicated to you guys it looked like it was a bear flag, and from 112 it's down to today's low of 77.70. Now looking back at a 2-day chart, you'll see a massive head and shoulders type top. The neckline has been broken. The ultimate target for me is 69.70. If we get any kind of rally back towards say mid-80s, then I'd look to short it for a move down towards 70. IBP is also broken. This stock, as you can see, has formed a little micro head and shoulder top, broke down, snapped back to the moving average, failed, formed the big bear wedge, which I noticed, and as a result, I put it on our swing short list, and subsequently roll over from 25 to 19. The real support is around 17, and then beneath that, 15.5. Those are my targets. IPBH, wow, it just absolutely collapsed after breaking the massive top and forming a big bear wedge. That was a no-brainer right up there. When I see these kind of breakdowns from their highs, from the top, and forming a bear flag, and the moving averages can't even get through the moving average, it eventually does stair-step its way down. Look at that bear wedge and look at that bear flag, and we're down to 24 from where I first noticed it at 56. Nice successful short. Longer term, you can see it's plummeted down towards a big support level, and I wouldn't be aggressive to short it here. What I'd look for is a snapback towards the high 20s if it's going to go lower. PVH is a stock I spotted in October when it broke down and formed the bear wedge. Look at that beauty. From that $100 range, it's dropped down to 67 and change today, losing 1/3 of its value, forming a big wedge there and a little bit wedge there. Looking at a weekly chart, you'll see the big massive top rolled over, and it's actually broken intermediate support, which could lead at one point, perhaps even down to as low as 52, my eventual target. But what I'd like to see on this one is some sort of move back. Since this appears to be the bottom of the channel, I'd like to see a move back to at least mid-channel up around 75 to 77 before I get more aggressive on the short side. PZZA is a boxer swing short that when it broke down and formed the wedge, I gave it to you around 58. It subsequently rolled over 10 points, although it is near support and near the bottom of the channel. So at this point, I would look for a snapback up to test the 53 range, and then maybe we can get a rollover eventually into the mid-40s. Restoration Hardware has absolutely gotten clocked since I first spotted it on the flag there and on this wedge there. It's dropped from 80 to 62 and change just in the last week and a half. It's broken through 3 layers of support. The larger pattern shows that the next major support level comes in around 55.6, and although it's so far so fast, if we're going to get down to that level, eventually what I look for is a snap back to this resistance zone about 68.9. Keep an eye on that one. If it does that, very steep angle of descent, but if it does that, anywhere up there we could see a rollover eventually, so keep an eye on that one. Although I will say on the negative side, it's had 1, 2, 3, 4, 5 waves down, with the 5th wave being a spike down, so we may get a bigger consolidation. Red Robin Gourmet, I've been bearish since I gave it to you in the low 80s, and it's now in the high 50s. Not a surprise to me, but it's at support in the bottom of the channel, so I'm not sure here. I will say that if it takes out today's low at 55.5 3/4, we should see 49. Skechers still negative after the breakdown and snapback, which could not get through the gap. It formed a little consolidation and then started to roll over. Today it dropped down another small fraction. You can see where it supports about 24.5 and then 21. Those are my targets. And lastly is Williams-Sonoma, which is a boxer swing short since it broke down and formed a big bear wedge. And then this little flag in here, see that? This bear flag set up a nice drop from 74 to 51. Big drop, just in the last couple months. However, in this case as well, we're down near a major support level and at the bottom of the channel. So we may very well see a snapback that gets it into the mid to high 50s before another short opportunity arises for a move down into the high 40s at some point. That's the lengthy video for tonight, and that's it for me. HB out.